All right, good morning, everyone. This is Monday Outlook, and what we want to do is look at the market to understand what's likely to move the market this week, what the volatility, where we're expecting volatility from this week. Mostly volatility comes from fundamental events. Most volatility comes from fundamental events, right? But of course, even though there's no fundamental event, we still see volatility in the market. But when you're talking about a surge of volatility that changes market direction, usually comes from fundamental events. So for that reason, we like to start from understanding what the fundamental, landscape looks like, environment looks like for the week. And Forex Factory is a good place to look at that and see what is likely to happen during the course of the week, right? For the instruments that we are trading, not for everything, right? So let's see that. And most of the instruments that we're trading or we trade have a correlation, have some sort of a correlation with the dollar, with the US dollar. And so whatever affects the dollar is likely to affect most currency pairs we're going to be watching for the week, right? So let's see that. This is Monday all the way to Friday. Let's see what we have for the calendar today, this week. For earlier today, we had a speech by the ROBA governor and the Bank of the Reserve Bank of Australia. Usually, whenever central bank governors speak, it tends to impact the currency of the nations that we're talking about here. In this case, Australia. So whenever the central bank governor of Australia is speaking, you tend to see volatility in Australian-based pairs, AUD USD, AUD JPY, AUD CHF, and so on and so forth. So you start to see a lot of volatility with those currency pairs. So that's the reason why we watch for the speeches of the governors of the central banks, like this one. And so this happened earlier today, 2 a.m. GMT +1. And then Tuesday, that's all we have for today. So we don't expect more such events for today. Then for tomorrow, we have flash manufacturing and services PMIs. PMIs means producing managers index. All right. So this is something that we also tend to watch this as well, because it brings a lot of volatility in the market to the market as well. It's a time when the data for producing managers, right, is released. Producing managers from different major companies across the world, for the UK, the Eurozone, the US, their opinion is sampled and then they make it into a report. And that's what we're talking about. So it tells us a lot about what's happening with the manufacturing industry and with the services sector of the economy. And you'll notice something here. You notice that this data is meant to come out for the Eurozone, for the UK economy, and the US economy on the same day, right? And whenever that happens, we usually see rapid movements in the market. So I will say watch out for what happens tomorrow from the early morning one, which is 8 a.m., all the way to the late one, which is the US, which is 2:45 p.m. All of that is expected to be quite volatile for tomorrow, right? So we're going to keep an eye on that tomorrow. That's for Tuesday. Then on Wednesday, we have CPI data for Australia. CPI is consumer price index inflation data for Australia. We're expecting that to come in at 2.9% tomorrow, as against 2.8% before. Then on Thursday, we have interest rate data for the Swiss economy, Switzerland, right? And basically, interest rate data for Switzerland is near zero. It's almost zero. At this moment, it's probably zero, right? That's why we're seeing 0.0 here. That's something we're expecting to see tomorrow, except we see a surprise. The market is just going to react to that. It will react to that because even if the data for last month or the last time and the data for this time are the same, the market tends to still react, whenever it has to do with interest rates. Then also we have GDP for the US. Last quarter was the quarterly data. Last quarter was 3.3%. And the forecast is also remains 3.3%. This is for Thursday, right? So the GDP gives us an idea of how the economy of any country is doing. If GDP is reducing, that tells negative. That tells you that there's a negative sentiment in the economy regarding that economy. That leads to negative sentiment regarding the economy. because GDP numbers are meant to increase to show you that there is growth in the economy. When GDP numbers reduce, it shows you there's weakness in the economy, which is not a good thing. And when you have multiple quarters of negative GDP, that's what we call a recession. Multiple quarters, at least 2 quarters of negative GDP, that gives you a recession, right? So for a forecast of 3.3% for GDP for the US for the last quarter, that is still good, even though, of course, when the data is out, that's when we will know what the data actually says, right? Then also on Thursday, we have unemployment claims for the US, which is also important. Then on Friday, we have core PCE index. Core PCE index is, well, personal consumption expenditure is an important metric that the Central Bank of the US watches very important, very keenly to make sure that they are monitoring what is happening with consumer spending, right? So this is something that's very important. It doesn't move the market that much, except there's a huge surprise. Surprise means that there's a difference between the forecast, the previous, and the previous and the actual. The actual is the one that comes out on that day. When there's a huge difference between the previous and the actual, that's what we call a surprise. And then that tends to move the market. But if there is no major surprise, then the market is meant to just, react a little bit to this news and then stay basically the same. The sentiment in the market will basically stay around the same area, right? So these are some of the important data we're expecting to see coming in for the week, right? Coming in for this week. So let's look at the technical side of things quickly. This is Monday, so there's a whole lot that we're expecting to happen during the course of the week. And usually markets, you have gold. This is gold. Gold is basically rising heavily. Gold has been buying since last week. And this morning, it touched an all-time high again of 3,722. And we'll see it's just buying. Usually when we see markets moving in this direction very heavily like this, the best thing for us to do is not to jump in for either a buy or a sell, right? So we can jump in into a buy, jump in here right now for a buy or sell. And why is that? Because first of all, gold is very bullish and gold is very volatile. Now, you don't know yet until the market tells you what an instrument is doing. You don't know what the instrument is doing. So it's best for you to be patient and wait for a signal that tells you what the instrument is doing or is likely to do going forward. Okay. So right now we just see only bullish moves. When we see bullish moves like this, what we do is we hold on, we wait for price to make a pullback. When price makes a pullback, that gives us an entry for us to get in. So gold is very bullish. We're going to be looking mostly for buy trades on gold, but at this moment, that buy trade signal is not there. Nothing, there's no signal now. And we can only see one thing, gold is trending up. That's the only thing we can see. So what is going to now, since gold is trending up, the biggest opportunities are towards the buy side. But then we can't just jump in at 3,721 or 3,722, right, and start buying. That's reckless because market can pull back at any time. If it pulls back, you'll be in an unnecessary losing position. Makes no sense, right? So that's what we're looking at here. We're going to leave gold for now and keep an eye on it. Then let's look at, before we even see, let's check out what the dollar index has been doing. Dollar index, the dollar is an instrument that is very, very important, a currency that's very important because it's basically it's the reserve currency of the world, and most trade and transactions across the world is done in the dollar, with dollar, right? So for that reason, we keep an eye on the dollar. We're watching it very carefully. All right. Now we see that the dollar has been buying throughout last week. We see from Wednesday, not throughout last week, from Wednesday when FOMC data came out. Early in the week, we saw dollar sell. Then after FOMC, the dollar started buying, and it's been buying since Wednesday night. We expect further upside. Expect dollar index to rise to somewhere around this area, this $98 level, this $98 level here. It's almost 98. Okay, so this $98 level. So this $98 level here is what we expect dollar to rally to. Once it hits this $98, then of course we can be expecting to see a sell. But in the meantime, dollar index is still expected to buy. It's expected to buy. And one thing you know about the dollar index is that the dollar index has a certain type of relationship with other currency pairs, right? Other currency pairs like gold, like Euro USD, GBP USD, and so on and so forth. Now, for gold, the relationship is not the relationship between dollar index and gold is not perfect. It can be very, very broken as it is right now. Last week, for example, we saw from Wednesday, we saw that dollar index started buying. But if you look also, you see that from Wednesday, gold sold initially and then started buying again. But when you look at instruments like Euro USD, you see that Euro USD has been doing the opposite. The opposite of what dollar index has been doing, right? So that's the way it's been. And for that reason, what we're expecting to see now on Euro USD here is probably a further sell-off. Further sell-off is what I'm personally expecting. I'm expecting the Euro USD to sell to this point. Now, this would have been an area. I'm a bit skeptical still. All right. I would have personally been looking to sell here, make a sell here. Can you see this? Very likely I might make I will be expecting to make a sell here, and then for price to then drop, I'll be expecting price to drop from here to this bottom here. But I'm not so confident about this. Why am I not so confident about this? Because overall, the dollar index remains very bearish. Now, if the dollar index remains bearish, is it possible that the dollar index is going to start selling from here and coming down? And the dollar index starts selling from here and coming down like this, then we are going to expect Euro USD to buy from here and go up straight. Okay? So for that reason, as much as the dollar, I've said before, as much as I expect the dollar index to buy till it gets to this point, probably get to this level, buy again and go up here, I have to trade what I see, not what I think. Because now with my analysis of price breaking, buying and coming here, that is what I think, right? Because of the levels I see in the market, because the structures I see in the market, I'm expecting price to buy to this level. That's what I think. But that doesn't mean that the market will play out exactly the way I think. So I have to look at what is the market showing me? What is the market telling me that it is doing, rather than what I think it will do? So this is something to be very cautious about. Always look at what the market is showing you that it is doing. And if the market is showing you something, please follow what the market is showing. Ignore what you are thinking. Sometimes the market will play, it will be very easy for you to read the market, and then the market is doing exactly what you're seeing, what you're thinking. But in many cases where traders get trapped a lot is when you are trying to follow your thinking, even when the market is telling you something different. Okay. So now that's my concern here. That's the reason I will not place a sell trade here. I would have expected to sell here on Euro USD, but I won't sell here. I would rather wait. This is where I'll be looking for a sell now, or a buy now. If price hits this level here, then I'll confidently be looking for a buy trade. If price hits this level here, if price goes up here, then come down, then I can buy here. I'm confident about that. Okay, I'm confident about this buy here, but I'm not confident about this sell here, right? But if price were to break out of here now, break out and start going up, then of course I'll look for a buy trade. I'll know that, okay, price is not coming here. Price has started buying. Because remember, what the relationship between dollar index and Euro USD is that if dollar index is selling, Euro USD is going to be buying. Euro USD is going to be buying. So the question now is that if the dollar has started selling now, even though I expect the dollar to rise, in which case Euro USD will drop before it starts buying. If this, if the dollar index actually starts selling here right now, coming down, Euro USD is going to follow suit, but Euro USD is going to buy. Okay, so for me, I'm going to be waiting for what happens above here. If it breaks out and starts going up, then I'll look for a buy trade. I'll look for a buy signal after the breakout. That's for a buy. But if it sells and comes all the way down here, then this will be my area for entry on the buy. Okay, this will be my area of entry for the buy. Let me see. Okay, mark this up. Hold on, guys. I'm trying to find a tool. Okay, so I'm expecting to see what price does above this area, or what it does here. So this is my target now. I want price to break out of this area, then I'll look for a buy. Or if it doesn't break out there, then let it come down here. I am not willing to trade any inside here. Okay. Of course, if you're analyzing your market and you see opportunity here, you can take. But for me, I'm not confident trading inside this area here. Okay. So yeah, that's for Euro USD. And you can see gold. Gold is breaking all-time highs again. That's it, 3,723. Just keeps rising. Like I said, on gold, you need to see a pullback. If they don't see a pullback, it will not make sense to buy this trade. You need to see a pullback before buying. The bias remains a bullish move, very bullish. Bias remains very bullish, so you are looking mostly for buy trades. Go sell, in my opinion, sell trades are not they are not the best for you to do on gold right now. You know, they are not the best. So it's best to wait for a pullback, then buy. Then what do we see again? Euro USD is not ready, like we said. Either buy there or buy here. Let's see what else do we have. BTC has just been behaving very crazily. Very crazily. So BTC for me, it's a low for now. You can see the sell-off that happened. This happened just this morning, very heavy sell. Very likely price will start to rise from here. Maybe when price gets here into this zone here, it can start rising, start buying again. Buyers may start to step in, but currently it looks like a seller's market still. It looks like a seller's market. So the momentum that pushed price down this morning is still not done. Seems like it's not done. It's likely to going to still buy sell until it gets to this level here. So that's something to keep an eye on for BTC. BTC should still come to around the 111,360 level before, or the $11,000 level. Sorry, not 11,000, 111,000. So $111,000 level is likely going to be the place where BTC will start to buy again. Okay. So that level here is where price should start to buy again. So until that happens, BTC is not it's not, you don't want to sell, you want to buy. So that's something to watch out for. So of course, the market is just beginning to move for the week. So we are going to have a lot of opportunities to trade during the course of the week. But in the meantime, if you're not on our Telegram group, make sure you're on the Telegram group. That's where we give you updates on trades, trade signals, buy and sell, take profit and all that. We'll give you constant updates in that group. Please keep an eye on that group, the Telegram group, and join it if you're not there already. And make sure you're there so that you don't miss out on our updates there. And also remember, guys, trading has risk involved. All these analysis I'm doing here, they are just trade ideas. They are just for us to understand what's going on in the market, not necessarily a buy or sell signal for you at this moment. Okay, so it's important that we keep an eye on that. We keep that in mind, that trading has risk. Always, please, when you have funds in your account, always make sure that you have your risk per trade in view. How much am I risking on a particular trade? How much can I afford to risk on a particular trade? Right? It's recommended that you don't risk more than 2 to 3% of your capital on any trade, because no trade is guaranteed. Okay, so keep that in mind, and then like I said, stay in the group, and then we'll give you further updates when we have trade signals to be posted in the group, and then you'll be able to take it and profit from it. Right? Well, we're going to end our session this morning like that, and then don't have any actual trades for us to enter now, because the market is still making moves. So like I said, that will be something we're going to give you on the Telegram group. So I'll see you guys later and on the Telegram group as well. Okay. Thank you guys for coming. See you guys on the next one.